The cash cycle is literally the time between when you have to put your first dollar out in order to supply a service or a good to a customer to when you collect your last dollar from that customer. So for example, if you need to order product and it's a purchase order and you have to put half down on that purchase order in order to get what you need to serve your client. And I'll give you an example of this as well. So we have a PR, an event planning firm that I work with.
Hi, I'm Pam Pryor, and this is the Cash Flow Podcast, where we talk about everything money related in your business. Without further ado, let's jump right in.
And welcome inside the Cash Flow Podcast. So glad to be here today. We're going to talk about 3 cash essentials. Now, who doesn't need to know about cash? I want you to hang on for that. But first, I want to talk about new news in fintech. Now, this isn't so much new news as it is old news, but it's important. I don't care what time of year it is. I'm bringing it up because we happen to be recording this in tax season. But this is something that will benefit you any point in time, no matter what kind of business you're in, as a solopreneur, as a consultant, as somebody who has to report expenses to a business that reimburses you, you name it, this tip is for you. You want to download an app onto your phone called MileIQ, MileIQ. Best thing since sliced bread. You put it on in the background of your phone, and every time you're in a moving vehicle that's like a car speed, it will automatically come on when you leave and go off when you arrive. And it tracks on GPS where you've been and how many miles it was. And then at the end of the day, or week, or month, or in some cases year, you can see all those trips. And they bring them up one by one. And you literally swipe left if it's personal, swipe right if it's work. Swipe left if it's personal, swipe right if it's work. And you can also set some things in there to say, if I ever make this trip, automatically make it work. If I ever make this trip, automatically make it personal. Cool thing, end of the year, all you got to do is press one button and you have your total mileage. End of the year, end of the month. If you need to get monthly reimbursement for mileage, you print your monthly report. Not only does it show how much mileage there was, but it shows you where you went and came from. So anyway, best app ever. I always forget to mention it to people, but I keep records with it because it's just so easy. The thing that I do wrong that I advise you not do wrong is I will often wait till the end of the month to do the swiping left and right, and it can take a long time if you drive a lot. So I suggest just every night as part of your shutdown routine, whatever that is, just take that day's trips, 1 or 2 maybe, and just swipe left and right, personal and business. There is your tip of the week. You heard it here on the Cash Flow Podcast. That will get you as much mileage reimbursement or tax deduction as you can possibly get in your business. All right, now let's dive into the meat of things. Speaking of cash and our deciding to or wanting to save it as efficiently as possible. Cash is so key in every business. So if you're an entrepreneur, I know for sure that you have dealt with cash. I know how much is coming into my business. I know how much is going out of my business. Or in some cases, as your business has grown, you're not really sure how much cash has come in or out. And I want to tell you a little story here. I started with a client of mine who was at the time just over 8 figures in revenue and profitable. I'd say the bottom line was, let's just call it 10% profit. So they were just at 10 million and they had about $1 million in profit, which was great, except he kept having to put money into the business and couldn't make sense of that. We're profitable. Why am I having to put money in the business? And what had happened is over time, as this business grew from nothing, the guy started in his garage. Let's be fair. He started in his garage, and then this business grew, and it went to distribution, and it went to manufacturing. So there are more and more people involved with the business now. And those people had kind of built little kingdoms around him. Now, not that this was a bad thing, okay? They weren't bad people, but they knew they had jobs to do, and they built up a process to do the job, very specific to their area. And what I'm talking about here specifically is inventory management was one of them, and selling to customers other than online was another. So there was some retail sale through a website. That's easy. No issues with cash there, right? You click, you buy, it gets delivered. They have the cash automatically. But in some cases, they were making sales to wholesalers. and these wholesalers were not paying them. So even though they looked at their profit and loss statement and said, oh, I sold all this money to wholesalers, there was this pile up of about $300,000 worth of cash that they had just let go, that they hadn't gone after to collect because it had gotten lost in the subsystem somehow. He wasn't aware that this had been piling up, and that was why he kept having to put money in the business. That was kind of the first thing. The second thing that was causing problems was that a very well-meaning person in the inventory area was buying up a lot of inventory because he could get it at a great cost. The more inventory he bought, the more he could save. But inventory had started piling up in the warehouse, and it wasn't stuff that was necessarily selling. We had these two things happening in the cash cycle, which was we were billing stuff out but not collecting money for it. And the second was we were buying a lot of inventory to get a price break that definitely showed up on the P&L, but it never actually sold. So what also showed up on the P&L was nothing because this stuff wasn't selling. So the thing number one that you need to know about cash is you have to understand your cash cycle. So what is a cash cycle? The cash cycle is literally the time between when you have to put your first dollar out in order to supply a service or a good to a customer to when you collect your last dollar from that customer. So for example, if you need to order product and it's a purchase order and you have to put half down on that purchase order in order to get what you need to serve your client. And I'll give you an example of this as well. So we have a PR, an event planning firm that I work with. And very often they have to put a purchase order in and get a venue to reserve a spot for this event. And the venue says, I need a deposit. So the very first dollar they put out might be, $10,000 deposit 6 months before the event even happens. And they're not even selling tickets for the event or collecting potentially from the person throwing the event until right up at event time. So for 6 months, they're out of pocket this cash. And then finally, tickets are sold and they get their money at the end. That's a typical cash cycle, say, for an event planner. I pay something very, very early, and then I need to start collecting from my client over time. And the time from that first bill to the last dollar they collect is their cash cycle. So you can imagine all sorts of different cash cycles depending on your type of business. In fact, you should think about your own and kind of draw it out on a piece of paper. What is my cash cycle? How does my cash come in and out of my own business so that you clearly understand all the places where it can get tripped up? In the case of the example I gave you, this guy had sales happening, but nobody was following up to get the cash because we didn't clearly understand that that was part of his cash cycle. And the second thing that was happening was he was paying money for inventory that just wasn't selling. It was sitting in the warehouse. So that's the first thing. Know your cash cycle and know the things that make it speed up or slow down, okay? What's the second thing? The second thing you want to do, and we did that with this client, is you want to forecast it. Because what we did was we said, okay, now that we know this is actually what's happening in the cash cycle, how soon will we get that money back if we do some things differently? And what we were able to do is build out a forecast that says, okay, if we start now collecting this money when we send the product, or within 30 days, or within 10 days of when we send the product, that will pull this much more cash into the business more quickly. And then looking at the inventory, for example, okay, if we only start ordering the amounts that we need or that we're going to sell, then all of a sudden we start putting so much cash out the door for inventory at a time. And now we can forecast that and say, okay, if we start to do things to change that, we can see how quickly we'll catch up and we'll be able to pay the owner back, or we'll be able to invest in the next new product, or whatever you might want to do with your cash. So that's the second thing. The second thing is to forecast it. And you can also do what we did here, which was, let me forecast what this looks like if you keep doing this. If you keep doing this, you're out $300,000 now. You'll be out $500,000 in 6 months. You'll be out $1 million in 12 months. So it gets the attention of the organization to say something has to change. And this is that typical time frame where things go from being kind of a founder-run organization to an organization where we really start to have to put some process and structure in place in order to let it sustain its new and really exciting level of growth, right? So that's the second thing. First thing is because we need to understand what our cash cycle is. Second thing is to forecast it. What's the third thing? Pretty naturally falls out of forecasting is let's be strategic about cash flow cycle now, which in this particular case, he was able to do. And we sat down and we said, okay, we don't necessarily like the nature of the wholesale market that we're in. So let's change to larger store wholesale and get better terms and be able to do higher volumes. And another particular thought was about the product lines that they were having, which ones were selling more. What can we do to bolster the ones that seem to really appreciate creativity and sell in high volumes versus the ones where people get bored of them pretty quickly and stop buying. So they really dove in and made some strategic decisions around product line. So that's the third piece. Once you know your cash cycle, you can forecast it, and then you can be strategic about it. And the whole purpose for this, and the place where this will really keep you from getting in trouble, is if you're growing. So that's why this is such a major thing to be sure you understand and do inside your business once you start to really make some money. You need the cash that you're generating in order to grow. You need the cash that you're generating in order to pull wealth out to yourself. You need the cash that you're generating in order to prove that your business can generate cash. And if you're getting to the point where you think you might be wanting to sell the business or add more businesses on, it's important for me that you understand, know that cash cycle, know how to forecast it, and know exactly what you want to do from a strategic standpoint to take advantage of it or minimize it or maximize it, really to get the most out of that cash cycle that you can. And it's a unique story for every business. We can tell some cash cycle stories in future episodes, but these are usually the things, cash cycle stories, that make or break businesses. And you're the entrepreneur that's not going to let it break you. So thanks for listening. You have a great day, and we'll see you next week.
I hope that video was helpful, and I hope you subscribe to my channel for more information on finances in your business.